We're in the TechCrunch studio today with Tim Sullivan, who's the CEO of MicroVentures. Tim, welcome to the studio.
Thank you, Semil.
So you guys are based in San Francisco, and you're, let's say, in the crowdfunding space. Can you tell us a little bit about what MicroVentures is?
Sure. We are a broker-dealer that focuses on investing in early-stage companies and providing liquidity for late-stage shareholders.
Okay. And so how long have you guys been around, and what kind of, how are you guys getting your funding?
Well, we received approval on our broker-dealer in early 2011, completed our first deal in June 2011, and since then have funded 30 companies for $15 million.
Okay.
And the funding really comes from accredited investors that come to the site, and we build a relationship with them. Initially, it started out, very incrementally and slowly, and now we've got close to 10,000 investors on the platform.
And so just to make sure we've got it right, so MicroVentures can go out and say, we want to invest in this company, and then present it to your LPs who can decide to invest in that, right? And then also giving them access to secondary markets, or maybe you can explain the model of how you guys operate. Sure.
So with respect to the early stage companies, we'll go out to demo days and incubators and other industry events. And if they're companies that are interesting, we'll initiate a due diligence process with them and introduce ourselves and find out if they're interested in being on our platform. Lately, we've had a pretty strong reception from companies to be on the platform, to get exposure for themselves due to the large number of investors now on the platform. Once they come to the site and are listed as a featured company, the investors themselves really vote in indications of interest whether or not they'd be interested in investing. If there's momentum in a given company driven from the investor side, we'll go ahead and initiate a formal raise with that company.
Got it. So it's on a per transaction basis?
On a per transaction basis. Okay. So it's curated, it's a fairly high and deep level of due diligence where, we're looking for any potential liabilities that could inhibit the company's future growth prospects. So, again, curated deals with deep due diligence, and we are a broker-dealer, so we have to follow the securities laws pretty closely.
Got it. Okay. And so can you walk us through a little bit? I mean, I know you've been studying the venture capital space and sort of seeing this as an opportunity. What do you think at a high level has been changing, let's say in institutional venture capital, and now, so many, let's say, seed funds and accelerators and incubators, that creates this opportunity for you guys?
Sure. There's a number of things that have changed, really going back to let's go back to the mid-90s, and I won't belabor it, but venture capitalism back then was operators who had a lot of experience and choosing companies where they could do their deep dive and again, had a lot of experience. Moving into the 00s, it became a different scenario where there were more of the MBAs that were hired right out of business school that were, given the job to put the companies in the funnel and distill it down to 2 or 3 companies that they would take a look at and make an investment in. It turned out that the model really worked better when operators were making those investment decisions rather than people without as much operating experience. And when things kind of blew up again in 08, a lot of the venture capital firms that hadn't made such great decisions about investing, they really went out of business. Companies like Sequoia, however, and Kleiner and others that had the more operationally oriented investment decision making, they rose to kind of a tier that hadn't existed before. So when it was kind of the top quartile, now it's the top 2 or even 1%. That left or created a bit of a vacuum, and the vacuum was initially filled by what we call now angel investors, but there were a number of angel investors, some such as Mark Andreessen, Ron Conway, Dave McClure, et cetera, who created a whole new category called the super angel. And with that super angel, there came a new class of investment for early stage companies, which was the seed round or the pre-series A, which was it became a convertible note, with a valuation cap and a discount to the Series
So what you're
A.
saying is that traditional venture institutional rounds are now moving later and bigger checks, and then there are smaller institutions and or individuals that are filling seed and even Series A type deals.
Precisely. So you've got the institutions that were investing in a Series B a couple of years ago are now investing in the Series A, but the Series A isn't a $1 million round. It's a $5 million or a $10 million round at a much higher valuation. So now who's investing in the seed rounds? You know, it's angels. And where do we fit in? We fit in with a very targeted effort right into that category.
And then from a legislative side, like how is it now possible that an entity like MicroVentures can exist, right? Where maybe it couldn't have existed earlier?
Well, from a legislative perspective, there are a number of different things going on. Obviously, there's the Jobs Act, which everybody thought was going to be incredible for creating jobs and stimulating growth in the economy. It hasn't gone anywhere because the SEC has had a hard time wrapping its head around what rules they can approve that are going to keep investors safe. You know, a lot of people will say, you know, I can make my own investment decisions. I don't need the SEC to tell me what I can and can't invest in, and that's fine. But the SEC has a job to do, and they're going to do that job, and we're going to have to wait until they come out with their decision.
So someone who wants to come to your platform, to MicroVentures, as an investor, right? Let's say they're in the Bay Area or not, they can come apply to be on your platform. They have to be accredited, right? And then they get access to the flow that you and your team see here, and also access to stock on secondary market, right? And have you guys been doing both kinds of transactions?
We have. So every investor that comes to our platform, we have literally a verbal conversation with. So there's no automation in the accreditation process, and I think that's important. I think if you automate that too much, you may indeed allow people who really shouldn't be involved in this space and that could mean a toxic investor for a company, or it could mean somebody who's unaccredited that ultimately could unwind a financing down the road. The platform, you know, allows our accredited investors to invest in early stage companies, and we do really off-platform a number of secondary transactions that are you know, available, but it's not something that we're going to advertise on the platform.
Got it. Okay. I was just curious, like, how do you guys, from a fiduciary standpoint, make the decision to say, okay, we can invest in this startup that's potentially very risky, or put some money to work where we think there's like a high upside in the secondary market, right? Or being opportunistic versus saying sort of investing in startups directly.
So, you know, it's one of those, again, incremental opportunities where individuals that come into the space are learning and growing as investors. So when they come to MicroVentures, they're mainly interested in trying to understand what it means to be an angel investor and invest in early stage companies. They don't even realize that there are other opportunities to invest in the private company market space. So we hopefully enlighten them, and the goal really for us is to bridge the gap between early stage and late stage and be a liquidity partner throughout the ecosystem.
Understood. And so I think the final part of this interview, let's say for founders out there who are thinking about, you know, raising money, which there's tons of them.
Right.
How would you talk to them about MicroVentures? Where do you come in? In what kind of companies or stages does it make sense for a founder to engage with you guys?
So a company that is at the stage where they're executing on their business plan, they don't need revenues, they don't need to be profitable, anything like that, but metrics that prove that they're executing. Those are what angel investors are looking for on our platform. You know, tech broadly defined are the types of companies that are interesting to our investors as well. And you know, in terms of reaching out to us, you can give me a call, you can give any of us a call or send us a note. And if you meet the very basic, you know, it's a very low bar criteria, we'll put you in the featured companies listing space. If there's momentum, we'll do our deep dive, and if there's, you know, no.
So you're waiting on your LP crowd base to sort of say, hey, we like this, and then you can initiate a deeper diligence on that.
That's right. We found that our investors have a lot more knowledge about any given company than we do, because it's becoming such a diverse group of investors. So for us to curate one deal at a time doesn't necessarily make sense. When investors, you know, when they have an opportunity to see 8 deals at a time, can pick the ones that they understand and know and want to invest in.
Great. Great. Well, congratulations on getting off the ground, and it'll be interesting to see what you guys do.
Thank you, Semil.
Thanks for coming in.